Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the either 1 hour delayed, depending if you're in the US, Canada, maybe some other places. I'm not sure where else, or on time. Well, slightly delayed, 1 minute late webinar if you're in definitely UK, Europe, and I think most of Asia. I'm not quite sure where every time zone changes to their daylight saving times, and some don't, and some do, and even some states. I understand now. I did some research at the weekend that I don't know if Arizona don't change or something. I don't know. Anyway. Um, so the situation is, and we should talk about this because it impacts. So not you guys in the US and Canada, but certainly anyone trading from outside the US and Canada, or anyone whose clocks haven't changed over the this weekend. So the US moves to daylight savings time this weekend. I can tell you, in the UK, that doesn't happen for another 3 weeks. I think that's the same in the European Union, and I'm not sure. I cannot be an expert on time zone changes and daylight savings time, etc., around the world. It's not my job. You know where you live, you know if it's changed or not. But basically, what it means is if you are trading US markets, so you do need to know. Obviously, everything is effectively, if you are in one of those zones who haven't changed, like I am, then the time difference has changed. So, for example, usually between the like Eastern time, so New York and London, there's a 5 hour time gap between New York and London, for example. At the moment, from yesterday, there's only a 4 hour time gap. So obviously, if you're in the UK, if you're in the US at the moment, you're watching this 1 hour later, but I'm doing this at the same time that I always do it. However, that was a mistake today. Okay, so going forward, we will be changing to from tomorrow and for the next 3 weeks. If you're in the UK or in Europe or any zone that hasn't changed, we're going to go to the US times. So we're going to go back to doing it as we normally do at 7:30 Eastern, 6:30 Central. Okay, which for if you're now in, say, the UK, for example, that will now be 11:30 GMT. Okay, and so from tomorrow we'll be doing 11:30 GMT, and then you guys that are in other zones, time zones, work out whether it's on or not from there. Okay, from 11:30 GMT. Sorry, where you are in relation to 11:30 GMT. Also, if you are obviously even more important than just coming on to Steve's webinar, right, the Bull versus Bear webinar. More importantly is when the data comes out. So the data that normally, for example, in the UK, the main US data, right, it comes out for me at 1:30. Okay, it comes out at 1:30, so it comes out in 1 hour's time after this webinar. Okay, so if you're in the US, that's 9:30 Eastern and 8:30 Central. Okay, now I that if you're in, say, the UK now, that data will be coming out earlier, so it would have come out now, right? Because it's those are the times. So basically, if you're in the US, things haven't changed. Also, the opening and closing times in the US. So in the US, if you're in the US, nothing has changed for you guys, right? But if you're outside the US, then the opening and closing times, the end of day closing times, and that 1 hour that we're closed, that you need to know that you can't trade, okay, that you have to be out of all positions by, that could have changed for you, depending on, again, if you've changed or not. And again, I can't be an expert for it. So please do check when the data is coming out. It's going to be different, okay? It's going to be different. So for example, tomorrow we have US CPI data, okay? That US CPI data, okay, is going to be coming out, if you're in the UK, an hour earlier than usual. Okay, it's going to be coming out at 12:30 GMT, for example, right now where this webinar is. But tomorrow we're going to be doing an hour earlier from tomorrow. Okay, so anyway, I've sent loads of emails out on this. We sent emails out on this. There's notes in the Discord. We put it out on social. It's in the forums. Okay, please do go check it out. So it's just basically, if you're in the US, nothing really changes for you, except for this webinar is obviously an hour later than normal. But from tomorrow, it'll be back to the normal times from tomorrow. Okay, the webinar will go back to normal times here in the US. If you're in the UK, you'll be watching it. Or in other time zones, you'll be actually coming to it 1 hour earlier. So it'll be 11:30 GMT from tomorrow. But the more importantly is to check out when the data is, in your time zone, and when the closes are in your time zone. For the UK, that's going to be for the next 3 weeks. We're going to have this different time difference, and then the US, the UK, and I think Europe goes over to daylight savings time in 3 weeks' time. At the very end of March, I think it is. Yeah, the very end of March. Okay, enough of that. We're talking about time zones. Let's talk about the market. So I'm going to run through, what we've had and what we've got coming up. So just below where you are, we have the three columns. The middle column is the fundamental macro reports that we put out at the weekend. So this is the macro matters, the longer one. I'm not going to go through all of this, but talking about what's gone on this week. The shorter one is the weekly recap and outlook. I'll run through that, what's gone on and what we've got coming up. So US stock averages hit a new record highs again, as we know, last week. Powell in here, mixed messaging from Powell. We spoke about this on Friday. So on Wednesday, he was far more hawkish, and then on Thursday, it was definitely more dovish. Said that nearing the conference required to consider rate cuts, but also emphasised that on Wednesday they would hinge on the evolving economic outlook and data on inflation and employment. We obviously got that. We had the employment data on Friday since then, which was relatively strong, although it was a mixed kind of bag, but relatively strong employment report. And we did get kind of a sell-off on a strong report, as we said we might, even though the unemployment rate actually went up. So kind of mixed messages from the unemployment report in here. We said it way beat the we were at 198, I think, was the expectation, coming at 275. So a big beat again on there. Although we did get some of the previous numbers were revised lower. But mixed messages from Powell. But overall, the second message was that we're looking to cut soon. And so the market liked that. ECB remained unchanged, but have been discussing when they are likely to put the first rate cut in, probably after the Fed, but probably not long after the Fed. And growing anticipation that at the March meeting in here, the Bank of Japan will hike rates, moving away from their negative interest rate policy. So equity futures went to either multi-year, depending on which country you're looking at, but multi-year highs or new record highs in the US. Yields actually went down last week, which is supportive. US and Europe went down, which is supportive of higher equity prices, lower yields, lower interest rates, supportive of growth stocks in particular, hence the Nasdaq doing well and growth stocks, tech stocks doing well. US dollar with lower US yields going lower quicker than the European yield. So the yield differential, meaning the US dollar weakened across the board in here to multi-week lows, and that allowed gold to continue its surge from the prior week higher, so to new record levels on gold. And oil was kind of sideways but went lower at the end of the week. Nothing of massive note coming out of central banks this week. This is actually incorrect in here. I realized after we published this in here, and I haven't gone and corrected it, but Fed watchers must be watched. Fed watchers don't need to be watched because we're on the embargo. Okay, so in here we have the meeting a week and a half before the meeting. The Fed go on their blackout period, so there won't be any Fed speakers. So that started on Saturday. So no Fed speakers. So that is actually incorrect in here. No Fed speakers in here. So a very, very quiet week on the central bank side. We've just had the ECB. We've got Bank of Japan coming up. Fed is not till next week. So a very quiet week on the central bank side. On the macro side, in the data side, the big data point is the US CPI on Tuesday. On Tuesday, we also get the UK. Nothing really of note today. We've already had the Japanese GDP number, which came in slightly better than expected. But the real big data we get is all coming through on Tuesday. We get the US CPI, which is really the big piece of data in here. No trading, remember, 2 minutes before or after that piece of data. It's one of our embargoed pieces of data that you can't trade over. We'll give reminders of that tomorrow on the webinar, and also emails are being sent out. We also get the UK employment report ahead of that, and German CPI tomorrow as well. So some important data. US retail sales on Thursday as well should be watched, and that could be interesting as well. But the real big piece of data is tomorrow. So likely a quiet data ahead of there, but then looking for the markets to kick in really from Tuesday. So likely today, with very little on the dashboard, we're looking for markets to be relatively quiet. I wouldn't be surprised to move more of a consolidation day today. And then also I'm noting in here that we've moved to daylight savings time. Okay, if we look at the headlines in here, The other thing I wanted to know, now this is getting a little bit ahead, okay, but I talked about the Fed meeting in here next week, not this week, next week. And we're very much expecting no change. I think I've closed the CME Fed Watch tool, but 99% chance that we're not going to change rates. Really, no one looking for a rate move in here. But however, what I did want to point out that it says in here, Fed projections show if rate outlook stays intact through strong data. So next week at the FOMC meeting, we do get the dot plot chart. Now the Fed meetings in here, let me just go and throw up the Fed meetings. We get a Fed meeting about every 6 weeks in here, and they have a slight summer recess in here. So let me just bring up the you can bring up the Fed Watch tool, or you can actually go in here, and then there is the Fed calendar you can look at, FOMC calendar 2024. Yeah, so you got the Fed meetings calendar. So in here you can see we've got about every 6 weeks, 1, 2, 3, 4, 5, 6, 7, 8 through about every 6 weeks, and we get like a lull through the summer. Actually, there's still 6 weeks through the summer. Yeah, 6 weeks through the summer in there, end of July to mid-September. So it's about every 6 weeks we get a meeting from the Fed, okay? But it's only 4, so we've got 1, 2, 3, 4, 5, 6, 7, I just said that 8 meetings in here in 2024. But only on quarterly do they do the dot plot chart. Yeah, so that's this bit here. Look, meeting associated with a summary of economic projections. So you see, even though we're really expecting not very much, we are getting that. That's the dot plot chart, okay, the little asterisk there. So we had one back in, it was the one in December, and so it's basically every 2 meetings you get that. So we get the dot plot chart, the next update of the dot plot chart. That's going to be super important. Remember, at the last dot plot chart back in December is when the Fed indicated there would be 3 rate cuts this year. The market then immediately went in and priced that we get 6 rate cuts this year. Okay, they'd already been pricing in about 3, and they looking for more. Now the market has pulled back, and the market's only pricing in about 3 to 4 rate, not hikes, not rate hikes. Forget that. Rate cuts. So you can see we've got like almost 0% chance of a March cut. And if we go to December by year end, we're sitting in here 425 to. This has been oscillating between these two, 425 to 450 or 450 to 475. This one here is 3 rate cuts. This one in here is 4 rate cuts. Okay, so the market now pricing in effectively 3 or 4 rate cuts in here, more likely 4 rate cuts, with the Fed telling us 3. The dot plot chart, again, this is some way out, but they are just highlighting it. Bloomberg, Fed projections show if rate cut outlook stays intact through strong data. So the data has continued to be strong. Are the Fed going to cut rates given that data, the consumer looks strong, the employment situation looks strong? Will they want to be as aggressive? Will they be more aggressive because they're more confident in the economy? Will they be less aggressive and let inflation come down under control? And we'll get more of a clue at the Fed projections, the dot plot chart, when we get that. That doesn't come obviously until next week though. So that's from Live Squawk. Remember, that's in the 3rd column below. So we've got the first column is my technical analysis. We'll come to that soon. We get the macro matters and the weekly recap and outlook that we've just looked at. You get those in that middle column, and in the 3rd column, all the news in here updated from Live Squawk. 5 things you need to start your day. Let's just run through that. There's so much debate over whether US stock market is overheating. Talking about bubbles in here. We've been talking about that a little bit in here. For me, I don't think we're anywhere near a bubble yet. Are we going to go into a bubble? Potentially, but are we there yet? I don't think so. It really doesn't feel like that to me. It's not quite a repeat of the trade that imploded in Volmageddon in the early 2000s, but it's a distant cousin known as short volatility bets. We don't really need to worry about this. This is not really going to impact up potentially. It might do, but I wouldn't want to worry too much about that. Speaking of market calm, big macro event, as we know, is the inflation report. Probably going to be light until then. Bitcoin has broken through 71,000 for the first time, 6th straight day, taking this year's rally nearly up 70%. This is very much a risk-on move in here. It's also helping out. Remember, I said about the dollar weakening. Dollar has gone lower, weaker dollar. Remember, Bitcoin is quoted in dollars, so a weaker dollar equals effectively a de facto stronger other currencies strengthening. So it's just as the euro, Bitcoin's going up in terms of dollars, it's quoted in dollars, right? So what not as necessarily is rallying in euros and other currencies as well, but not as much. It's because the dollar weakness is helping this, and also we're in a general risk-on environment, okay? And then obviously there's other things going on within the crypto market, which is helping it higher. Bank of Japan's meeting draws closer. That's on 18th and 19th. That's next week. Pricing the risk will scrap the world's last negative interest rate. So that that's been on the cards. We've been talking about that, and then it means that the yen is strengthening. Remember, an increase in interest rates. There have been negative interest rates, a move back to maybe zero interest rates in here. That's positive for the yen. You're more likely to want to own yen if you've gone from negative interest rates to positive interest rates or zero interest rates. So the yen has been strengthening on the back of that. Stronger yen is negative for stocks, for particularly exporting stocks and companies that export. There's a lot of exporting companies in the Nikkei, things like Sony, car manufacturers, etc. So Japanese stocks have gone lower again in here with the strength in the yen, and we'll look at that as we go through. So Fed officials are signaling interest rate cuts are getting lower. So we've already spoken about that. And we might get some more information on that when we get from the dot plot chart. This is really recapping what we got last week but we're obviously nothing more coming from federal speakers this week because we're on the blackout period. US futures slightly down, Bitcoin going up. Dollar index heading for its longest losing streak since 2020 in here. So dollar index, the dollar generally continuing to go lower. US futures ease as focus turns to inflation data. Bitcoin up. All the things we've covered in here already in here. Quick nod to actually just one more other thing in here. I'm going to share this one. I think this is a really good little article. I was reading this before we came on in here. So take a look at that article if you have access to that in Reuters. I hope you do. I do have an account, but a lot of the Reuters stuff is free. I think this is a really good article talking about the potential for rate moves next week. So do take a look at that one. I'm not going to go through it, but and obviously the Fed projection. Sorry, not the potential for rate moves. We know there's going to be no rate moves, but what the projections are likely to say. So looking ahead, this has got the dot plot chart's going to be super important next week. So you might think, next week, 99% or 97% chance of rates unchanged. It's going to be a non-event. Okay, it is going to be an event because of the dot plot chart, because of the projections in here, seeing if the Fed are shifting to moving earlier and seeing if the Fed are shifting to be potentially a more aggressive rate cutting stance in here. So a quick nod to the overnights in here. We've got Nikkei down as we said in here, but the Hang Seng was actually up. So mixed out of Asia, Nikkei down with the strength of the yen. European exchanges are down between 0.25% and 0.5% across the UK, Germany, and France in here so far today. And we've had a dip on the US futures this morning, again about down between 0.2% and 0.25% in here so far today. Yields continue to go lower. We were speaking about that. They went lower back at the end of last week, continuing to track lower the US yields. That's helping the weakness in the dollar and the strength in gold, but also helping growth stocks, helping tech. So this should be positive for tech if we continue to push lower in yields. So keeping an eye on that. And then there's the fixed income analysis. We continue to go higher in price, 30-year, 10 years, and pushing higher, trying to spike higher in here. So the more we go higher in price equals lower in yield. So particularly keeping an eye on here. We've got this kind of look. We spiked above some of this resistance points in here on the 2-year during the US. You can see we've got that spiky activity. That was through the employment report on Friday. But this is certainly pointing higher. And remember, the short end in here, more a reflection of interest rates. The longer end, more a reflection of the economy, 30-year, 10-year. The short end, more a reflection of interest rates and where they're going, what the central bank is doing. So if we can get those going higher in here, then certainly with the risk is for stocks to go higher too. And stock indices, despite the sell-off that we've seen in here back on Friday, after that better than expected, we did say that, better than expected, the market spiking higher and then back lower in here on the stock indices after a better than expected report, lower on the NASDAQ as well, but still above key supports in here, and we're still cautiously bullish. But there was a weekly dark cloud cover formation on the weekly candlestick, which you'll see a negative. You don't see that in here. There was a weekly dark cloud cover, potential negative in here, but it's all going to be about CPI. It's going to be all about CPI this week in here. I'm not going to run through all the charts. You've got the charts there in the analysis and the levels. Take a look at those. But basically, even though we had the sell-off on Friday and we are lower again this morning, clinging to a positive tone, looking to buy at supports. If we break down through some supports though, then feel free to go short. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Remember, tomorrow, if you're in the US, it's back to normal times. This was an hour later today, right? My apologies for that. Got a bit muddled up, even though I sent all those emails and all those alerts out over the weekend. But remember, guys, from tomorrow we're back to normal time if you're in the US and Canada. If you're elsewhere on the planet, we're likely to be an hour earlier than this one, right? We're going to go for an hour earlier if your clocks did not change. Yeah, you need to know where they are in relation to the US time zone. So we are going to be on 07:30 Eastern time and 06:30 Central time. Okay, 07:30 Eastern, 06:30 Central time is when the webinars will be for the next 3 weeks. I know GMT, it's going to be 11:30 GMT. So if you want to mark it off from GMT, wherever you are in the world, webinars for the next 3 weeks from tomorrow will be 11:30 GMT. It's 12:50 GMT right here, right now. So 11:30 GMT, mark it from there, and then we will go with that from tomorrow. All right, guys, have a good one. Take care, stay safe, and I'll be back with you tomorrow at that earlier time for non-US and normal time for the US.